Well, I mean, as we know, this is a conference of breaking through barriers, and there's a big breakthrough right now in terms of digital currencies, and of course, that being the first bank launching a digital currency. So with that, and so we can learn a little bit more about it, the uses, when we can expect to see it, and also, of course, the security surrounding it. Let me introduce our esteemed panelists. We have Jean Desgagne. He's a former bank and exchange executive on a number of boards, and also the executive in residence at Telfer School of Management, advises on a number of startups, and is also the CEO of Stablecorp. So welcome. We also have David Taylor. He's the president and founder of Versabank. Maybe we should all raise our hands a little bit here so we know who we're talking about. This Versabank, of course, is the world's first branchless bank, and interestingly was established back in 2002. I say that interestingly just given where we are in the world today, and really was built on proprietary PC-based software. It has been Versabank and continues to be at the forefront of innovation and tech-driven banking. We also have Gurpreet Sahota. He is the security chief architect of cybersecurity for Versabank, and interestingly, importantly as well, formerly held key positions at BlackBerry, the principal cybersecurity at BlackBerry, and is the chief operating officer for DRT Cyber. So with all of that, everybody, welcome. We have a great panel to discuss exactly what's going on in the digital currency world, and of course the breakthrough that we're talking about here. And David, why don't I just first start with you? This is obviously a collaboration between Versabank and Stablecorp, but talk to us a little bit about the description as to what we're expected to see on a digital currency front come June.
Well, and thank you everybody for joining us. A little bit of a historical perspective. Versabank is a bank that I created some time ago to take advantage of new technologies. And the idea was that we could serve niche markets by developing software to access these markets and provide a value-add service to our customers. So the original model was to gather deposits electronically. And what you see now with the advent of the VCAD, or the Versa coin in Canadian dollars, it's just a natural evolution of that digital method of gathering deposits. So what we're doing now is we're through the help with our friends in Stablecorp is providing a digital deposit receipt that's facilitated by the blockchain, which will mean that our depositors will not only have a highly encrypted digital deposit receipt, but it'll be easily transferable. So in all intents purposes, it'll function as the stablest of stable coins, in that it is not tethered to a bank deposit. It actually is a bank deposit, and it'll have all the features of a cryptocurrency, highly encrypted and easily transferable. So we're really excited about this, to be able to bring this new cryptocurrency vehicle to the marketplace. And secondly, from the bank's perspective, it's just sort of a natural evolution of the bank's deposit raising abilities, utilizing the newest technology being a blockchain technology.
And Jean, maybe talk a little bit about the collaboration and why this was the right match. Why did you go down this path?
Thanks, Catherine. Great to be here. I just want to repeat a point that David made, and I'll drive on. The fact that this is a bank deposit is a massive change from the traditional stablecoin model. The traditional model is you give me a deposit, a dollar, I put it in a bank account and give you a stablecoin, and then we have to have all these mechanisms like audits and other things to make sure that I actually put it in the bank account and didn't take it away. And even though Desgagne is a great guy, I don't think that that's the bet you want to make. In this case, when you give us a dollar, you actually get a bank deposit that's in a Canadian chartered bank. David didn't say A-rated, but I'll say it. There you go. It's effectively a credit-rated stable coin that's covered by all of the regulation that we have in Canada. And in Canada, we have very good bank regulation by OSFI, et cetera. So it's a really, really powerful tool. And for us, migrating from the traditional stablecoin model to this was really a no-brainer. We believe really strongly that every aspect of capital markets and banking is going to be digitized over time. And the impediment to getting there is really having solid bits of financial market infrastructure, really good payment mechanisms, really good exchanges, really good custodians, really good lending facilities, etc. But to grease all of that, you need a really good settlement mechanism, an actual transfer of value. And this to me is going to be one of the strongest ones out there, because it's got the A-rated Versabank behind it, but more importantly, the stability of the Canadian banking system and all that entails. So people will be able to use this stablecoin with complete confidence that it's worth $1 today and it'll be worth $1 tomorrow, and no one's going to abscond with their money. So for us, partnering with Versabank on this was really a powerful sort of evolution of our model.
Quick question here. Was it difficult to get done? Again, because, and to emphasize your point, Jean, is that this is the first cryptocurrency that's backed by a bank, if that's even really the right way to phrase it. So how difficult was this to get done? And I ask you that also in the same vein as to what we might see in terms of other cryptocurrencies being backed by banks around the world.
So the even more basic challenges, companies like ours have traditionally struggled with just getting banked. So never mind having a stable coin, just having a bank account where you can pay your payroll and paper clips and that kind of stuff has always been a challenge, because the banking system and the banking system in Canada is very conservative and has shied away from firms like ours, never mind actually getting involved in the stablecoin side of things. And I think that the work that David and his team have done to characterize this as a bank deposit. David's bank is in the business of accumulating deposits. They're a big deposit gathering bank. They're very, very good at it. And this is just one more form of deposit. It just happens to be, represented by a bit of electronic, technology, if I can call it that, a digital version of a deposit. But it's no different than a guaranteed investment certificate that you can get at your friendly branch or whatever. That's a nice piece of paper that you can't do anything with once you have. Here you have the benefit of getting this deposit, and because it's digital, you can use it in a whole bunch of use cases, which I'm sure we'll get to in a few minutes.
Mm-hmm.
It's very, very persistent. So it's been difficult to get banks, and more important, it's been very difficult to get banks that have the imagination to be able to really understand what this truly is, which is not something crazy, but actually is just a bank deposit. It harkens back to 100 years ago when banks issued banknotes. You could have a banknote from the Bank of Montreal or whatever. This now becomes a really cool digital version of that.
And we will definitely get to the expected uses and uptake in this in just a moment. But I do want to bring in Gurpreet for a second here, because when we think about some of the attributes, the positive attributes that were just discussed, people also want to make sure that there's significant security around it. So maybe just talk to us a little bit about why we can feel secure.
Absolutely. So I think some of the points that David and Jean have already made ring true, in respect to the cryptocurrency space, especially around the term around stable coins, which is ensuring that the deposits that back the cryptocurrency or the stable coins are actually there and actually have the value that they indicate to the market that they have. And I think that's one of the key things that the market's probably seen, especially recently, is the trust element around specific stable coins and whether they actually have the associated assets or not. And what this allows us to do is leverage a Schedule I bank that basically has the ability to attest accurately and all the time that the associated deposits are there. So that's one aspect or one element of things. Secondly, the other part to this is obviously ensuring that the minting and burning process of the stable coins is basically done in a controlled and secure manner. And what better way to do that than to utilize a Schedule I bank and their existing cybersecurity practices, as well as their business practices, as well as the fact that they're fully audited essentially all the time and highly regulated, which allows us to basically ensure that we have a process that can basically stand the test of time, and in respect to attesting to not just the monetary deposits, but the handling of the cryptocurrency itself and the issuance and the minting and burning of the actual stable coins.
Gurpreet, can you give us a little bit more granularity? When I can understand minting money, but when I hear burning money,
Right.
what does that mean in the crypto digital world?
Okay, so as we issue VCADs, we need to ensure there's a 1-to-1 ratio of bank deposits held by Versabank and VCADs out in circulation. So again, in order to maintain that 1-to-1 relationship, as more and more demand for VCAD builds up, we will take in the associated Canadian dollar deposits and issue the same number in VCAD back. So let's just say $100,000 is deposited at Versabank for this purpose. We will mint or issue 100,000 VCAD into circulation. Now, at some point in time, someone may want to actually redeem some of their VCAD, and that may actually flow back to some of our partners or Stablecorp in this case, and they would essentially say, okay, in this case, we actually need to redeem the VCAD back to Versabank and have the associated Canadian dollars released. At that point, we essentially have to burn or destroy the VCAD again to maintain that 1-to-1 relationship. So ultimately, this process has to be secure, so we can't issue more VCAD than we actually have on deposit, and also the other way around. We can't issue. We can't have more on deposit than VCAD in issuance or in circulation. So all of that has to be a very secure and controlled mechanism.
And in part, that has to do with the one-to-one relationship with, in this case, the Canadian dollar, and trying not to have too much volatility or move away from the actual fiat currency, I believe. David, maybe you can talk a little bit about that in terms of some of the features of VCAD and why, new users might like to use it, especially as we maybe start to travel globally.
Yes, well, because VCAD represents a Canadian dollar deposit, it'll always be worth the Canadian dollar, like all our deposits are. So any holder of a VCAD would have the assurance that all our depositors do, all the depositors of Canadian banks do, that it actually represents a deposit with the bank and that they can redeem it as they see fit. Ours comes with the investment grade A rating also, which is a new feature for cryptocurrencies. So if you're outside of Canada and you're not all that familiar with the Canadian banking industry, you will know what an A rating is. And the VCAD is unique at this point in that it's the only cryptocurrency that would have an A rating that would be universally known throughout the world, wherever country you may be, that is an A-rated deposit. So that adds to the stability, and I would expect that it would trade perhaps a tiny premium over a Canadian dollar, and that its the utility is that much better than the underlying fiat currency, but certainly no less, in that a merchant that's accepted VCAD as payment always knows that if they want to, they can present it digitally to our bank and receive their Canadian dollars back again.
And Sean, what are you weighing a little bit as well in terms of the uses that you are seeing and the size of the market for stable coins, and where you expect to see this over the next year or two?
So I could talk for hours about that, but I won't.
Sure.
Let me give you 2 or 3 use cases. Maybe I'll start with one of the ones that's maybe a less resistance around and go to some bigger ones. So the crypto world already understands stable coins and understands this, and so that's probably the initial place that we would start. There's a whole series of exchanges out there that trade in Bitcoin and Ether and things like that, and getting fiat money into that platform and out of that platform is very challenging, and these exchanges aren't really set up to manage fiat well. They're not banks. There's no deposit insurance. There's nothing behind it. And so, taking on the onboarding and offboarding of fiat for organizations like that is a really classic a use case for this. And as well, once you're in the exchange space, if you're trading out of Bitcoin and don't want to buy Ether yet, for example, this putting it in this stable coin becomes a nice, safe place to park it, where you know you're not taking any market risk or taking any credit risk, and so you can park it there. So that's kind of the first use case. That's a decent size, but not a huge market. Where it gets more interesting is, you have stable coins. We have some in the US, USDT being one of the biggest ones. So once you have a Canadian dollar stable coin and a US dollar stable coin, you now have a foreign exchange market. And so if you want to trade dollars for Canada or vice versa, you have another platform to do it via these exchanges where you can trade these stable coins, as opposed to going to the bank and doing all the painful process that you would do in a retail bank today to exchange your money. And as more countries and currencies develop stable coins, that market grows. And I think part of our plan might be to expand into other currencies as well, so we can create some of these markets. You mentioned traveling earlier, Catherine. So a really good example would be if I load 100 QCAD via some app onto my phone, I can then travel the world and use some of it to buy a coffee in England and a croissant in France and whatever, and have all those transactions be powered in the background by stable coins on my phone. But as a user who's traveling, I wouldn't necessarily know that, nor do I need to know that. All I need to know is there's a payment mechanism in the background that makes that happen. Another really good example for these types of transactions are, for people that send money back home to their family in other countries. A remittance, maybe you send $1,000 a month. When you use Western Union or one of the bank arrangements, it takes a number of days. The fees are staggering. In a $1,000 transfer, you might pay $100 in fees or more, which is insane. The beauty of something like this is, again, because it's completely digital, you can buy QCAD, you can transmit it to your relatives in whatever country. At the back end, that can be taken back into a local currency, and your relative can have the money not on Thursday, but like in 10 minutes. And there don't have to be significant fees, because none of us has really incurred significant costs in making those transactions happen. One more use case, and I'll stop. Like I said, it could go on forever. Another really good one is loyalty programs. There's lots of organizations that have loyalty programs where they reward their customers with, whether it's Canadian Tire money or other things like that. If you could have a reward program denominated in QCAD, it opens up all sorts of opportunities for your customers in terms of where they can spend or invest that value. And so that's a use case that we haven't done a ton of work on, but it's actually quite exciting for me. And so the FX market, the payments market, the loyalty markets, those are enormous markets.
Yeah, enormous. A lot to unpack there. I want to ask a little bit about the foreign exchange market, but first let me ask Gurpreet, as it relates to the technology behind this right now, are we fully there to implement what Jean just mentioned? I mean, I know we are, but with your background, I mean, what more needs to be developed on the technology front, or when this gets rolled out, and I think it's June, use?
So I think to kind of answer that question, I'll start by stepping back a little bit. I think one of the biggest impediments for cryptocurrency use today is basically active utility. And John and David have touched on this. When you go to a merchant or as a retailer, if you're settling any type of transaction, you want to be sure that neither one of them are essentially losing or gaining more than you expected as part of that transaction. So some of the other more, let's just say, volatile cryptocurrencies out there, that is one of the impediments of current transactions, is when you sell a transaction, the merchant or the purchaser could very well be out of more money or out of more pocket than they expected going into the actual transaction itself in a very short period of time. So what stable coins such as VCAD allow us to do is ensure that both the merchant and the purchaser are essentially settling on a known amount. And once you start having this element of being able to mimic existing world currencies, but in a digital cryptocurrency form, it does bring down the barrier of entry so much so that it's much easier for a merchant to start accepting this, even payment providers to start accepting this, or maybe there isn't a need for payment providers because merchants are able to actually accept and transact directly with the actual customers or the consumers themselves. So in respect to technology from that perspective, I think with the introduction of VCAD and any other V-based currencies that we might come up with or release over a period of time, I think what you'll find is the market utility and the ability for someone to actually transact actively will become more and more evident and actually increase or speed up the use of cryptocurrency in a more general fashion. So Jean went through some examples of sending money, foreign exchange, et cetera, but we also have to remember there's this huge purchasing power that is being built up into cryptocurrency today. There are some folks that are investing for the fact of they want to build value in cryptocurrency. They see the asset as appreciating, and it's an appreciating asset, so it becomes almost like an investment vehicle for them because that's what they believe. Whereas others are probably looking at it and determining, how can I utilize this cryptocurrency for what it's actually intended for, which is, underlying, it's a currency. So we need to have that usability, and that's where, tying it to something like a Canadian dollar, treating it like a Canadian dollar, but in a digital form. I think what you'll find is as we release this, there'll be a number of ready-to-go use cases for a lot of the users.
And Gurpreet, when we talk about that, and it's almost suggesting that the uptake will be quite quick. At the same time, we hear from governments around the world, whether it's central banks or the actual government, wanting to get involved, not sure how, who's going to be in charge. Is it the regulators? Is it the Fed or the BOC or the Canadian government? Where does that factor in? And this might be a question for really all of you in terms of, I don't know that we know the answer, so it's almost, you're really just your opinion, but I'm sure you're having conversations behind the scenes as well. Jean, let me just start with you in terms of how does the government and the regulatory environment play into what you see happening?
I think G7 governments have been studying the topic of e-cash, you can call it that, for some time. Back when I was an exchange executive running a clearinghouse, and that was not yesterday. We participated in a project with the Bank of Canada and Payments Canada to study the use of this for large value transactions. And they have a lot of issues that they have to work through around compatibility across the banking system and all of the other policy objectives they have. And long story short, they haven't solved those things yet. The Payments Canada is upgrading their systems, and blockchain is not yet a driver of anything that they're building. I think what we see around the world, everyone understands the power of this. And power is double-edged. It's power in terms of what it can allow to happen, the types of things that we've talked about. It's also power for national governments to control the digital version of their currencies. When you look at what's happening in China with the digital yuan and the power that it gives the government there, as Canadians, we may or may not be comfortable with that level of I'll call it supervision by the central banking authority. So there's a set of issues that need to be worked through, whether it's adoption, meeting policy objectives, confidentiality and security. So I believe in the fullness of time that central banks will do this. I don't expect anything significant, certainly not at a retail level on the street anywhere in the near term. It may start in the large value payment space, but for it to be something active that you and I see on the street, I think we're some time away from that. And so there's a real value that we can bring to the marketplace now that isn't otherwise there and won't be there for some time.
Understood. David, do you want to respond a little bit in terms of your expectations as well?
Yes, of course, we, being a Schedule I bank, are governed by the Bank Act. And the Bank Act was originally written many years ago. It has evolved. But one power that a bank has, a fundamental power of a bank, is to be able to raise deposits. And from our perspective, this is first and foremost a deposit. It's really represented, as deposits have in our case for quite a long time. But this comes a responsibility having a Schedule I bank license, and that is to ensure that you have the utmost in security for your bank and for your customers. And on the technology front, Gurpreet and his team 3 years ago created an integral part to this VCAD program that we call it the VersaVault. And the VersaVault has enabled us with Stablecorp to develop a very, very secure way of burning and minting and keeping track, which I think, frankly, behooves all banks, particularly all Canadian banks, should always be looking at ways to improve the security that they have surrounding their systems, particularly deposit raising. And what we see is we're simply evolving the security surrounds our deposit raising to the next level, a highly encrypted digital deposit receipt, as opposed to the not so encrypted digital methods of gathering deposits that are presently out there. And we know we have to, as bankers, continue to evolve in that the criminals of the world, the hackers, the nefarious folks, the bad actors, they're evolving very rapidly too. So it's very important for we banks to make sure we stay ahead of the game with highly encrypted digital deposits as the VCAD represents. So I expect our environment to be welcoming of taking it to the next level.
And Gurpreet, why don't you add in there with respect to your involvement in terms of security and in our previous conversation saying that this technology, this encryption technology, that there's no single point of compromise, and of course this just days after a cyber attack on a U.S. pipeline.
Yep. So it's a very good point, Catherine. So basically, the way VersaVault has been built is it's basically built with security at its core. So the difference between the example that you just gave there and the systems that we use at the bank, especially VersaVault, is they're systems that are built for a specific purpose and then secured after the fact. Whereas what we've actually built is secure by design and actually security at its forefront, along with the features that basically allow us to do what we need to do. So going along the lines of the no point of single compromise, that is the one of the sole intents of VersaVault is to ensure that you have enterprise level security and controls that essentially allow anyone to hold any digital asset and manage any digital asset, whether that supports multi-signature or not, but basically have a layer of what we call multi-authorization. So essentially you can specify based on the type of digital asset or even the value of the digital asset to say you need 3 officers or 4 officers from your organization in order to gain access to or even to interact with any given asset or secrets. And this is very, very similar to what the banks have been doing for many years now in protecting a lot of their assets, including, but not limited to, things like credit cards. So today, when a credit card is issued, it basically has something embedded in it that provides the authenticity and the security layer that basically ensures that any vendor, any merchant, any payment processor can validate that it actually came from that bank and nobody else. And what we've done is essentially ensured that similar security controls, processes, and technology are being applied here. And then just to kind of finish off it, one point that we have to remember with cryptocurrency in general is that the underlying use of private keys and PKI, etc., has been around for decades. So even though cryptocurrency is relatively new in its infancy, the management of private keys or secure secrets or secure data elements or digital elements, it's been around for several decades, and that's what we're leveraging here. My experience, having worked at BlackBerry, as well as the experience within the banking system and the way financial institutions implement these types of security controls, has essentially allowed us to build something like VersaVault for this specific purpose.
Mm-hmm. Which is so important to point out because, it seems so the whole cryptocurrency world or digital asset world is so new to so many people.
Yes.
But at the same time, it's almost like, well, remember years ago, if someone said, give me your cash, and I'll give you a piece of plastic that's called a credit card. You know, there's a similarity in terms of just feeling comfortable with a new method of payment. So I'd love to maybe end on this, which is when, you know, David, we'll start with you. When you think about where you expect to see digital assets, cryptocurrencies go in the future, what do you liken it to from what we've seen in the past in terms of a new financial frontier?
Well, behind me, I have a picture of over on Wilbur Wright's Wright Flyer. That's the first airplane. This is like bringing jet engines out. So it's not, if you liken it, we've been suffering with piston engines. This is a jet engine. It's a revolutionary change, what we're bringing out. And I see this, there's no doubt the industry will change to, well, all banks will raise digital deposits. They'll be like VCADs. They have to be. They need the encryption, they need the safety, and their customers will demand it. So I see that we're just at the forefront, and all the other banks will have to go along, and probably central banks will too. It's just inevitable, driven by customer demand and technology that's available, and keeping, as Gurpreet's talking about, keeping safe from the dark side of humanity out there, trying to foil our banks' plans.
Understood. Jean, would you like to add to that in terms of what you see it as?
I completely agree with everything David said. And I would say, you know, as the world tokenizes more and more assets, and we've done lots of stuff recently on non-fungible tokens, and, you know, whether it's Twitter posts or art or anything else, the reality is, or tokenizing stock, the reality is we want to have a payment mechanism to exchange, you know, at the same time, so that when I give you my token representing a piece of art, I get a token from you and representing a Canadian dollar, a VCAD. And the power of ours is, what better mechanism of payment than an A-rated bank deposit in a Canadian chartered bank? To me, it's a game changer, and it becomes a very important bit of financial market infrastructure that empowers all sorts of others.
Got it. Gurpreet?
Yep. So I'll just end by saying that, you know, cryptocurrency its utility depends on two things. One is value and one is security. So I think the market in general is responding to where it sees value in cryptocurrency, and we're essentially providing that security. And we're bringing that, you know, as a bank, but also coupling that with assurance and security by tying it directly one-to-one with the Canadian dollar.
Okay. Gentlemen, I think we will leave it there. Thank you all very, very much for the conversation. It's very exciting.
Thank you, Catherine.
Thank you, Catherine.
Thank you. We'll speak to you soon.